Good morning and welcome to Trading with Larry. Larry can't make it today, but you're joined by Clint Brewer, his right hand analyst, and I'm Eric Shamlow. I've been joining Larry every day. How are you?
Good. Great to be back again. Thanks for having me on the show.
Good, good. So, interesting markets. Let's just dive right into it. Tons of headlines yesterday. Trump coming out with all sorts of tariff rates on all sorts of countries. No trade deal yet. Announces August 1st, no more Taco Bell for him, starting August 1st, and the markets don't fall. Copper goes up like 20% in about a minute on his tariff, and we'll get into a little bit of the copper. I think it was fascinating what happened there. But the market is shrugging it off. What do you make of all this, man?
Well, I think the market's shrugging it off because I think these deadlines have lost pretty much all credibility. You had the original extension back in April. We come up to it, gets extended again, and I think this has been kind of the lesson too from the first time Trump was in office is that there's a lot of boisterous talk, but what's the follow through actually look like? And so, I mean, I think that's why you're seeing the market shrug it off. But I also think that speaks to a lot of the complacency that's out there because the risk is still very real that you have some sort of adverse scenario or risk of no deal. I mean, I know there's been, a lot of these letters are being released. A lot of these letters are coming out announcing tariffs. But I mean, so far, from at least from what I've seen, these are relatively small, minor trading partners. Um, where you're not seeing deals. So does it really matter that much? The main thing is where do things stand with the major trading partners right now? And I know there's still a lot that's up in the air. Deals are still being worked out, and again, that part of the reason I think the market's hovering near the highs right here is because there's not a lot of credibility that the he's gonna follow through with the threats, but at the same time, that possibility is there, and I think it speaks to a lot of the, let's call it, growing. Finally, we're seeing some growing signs of complacency out there, especially when you start looking at investor sentiment.
Yeah, that complacency. It's weird, bad things tend to happen like right at the market's most complacent moment. And I think we're getting there. We're getting there. It's funny you mentioned the tariffs the first time around and all the lessons learned from the first time around. And he was really going at the tariffs in his first administration 2018, right? And yeah, the market had some turbulence, but it it corrected itself to the upside, and it just like it did this time. But I think it's almost like irony. Like Jay Powell is going to be coming out of the Fed at the end of the year. Back then, too, in 2018, you had the whole tariff fiasco. The market rebounded just like it did this year, and at the end of 2018, what finally got the market down was Jay Powell trying to normalize rates and the market throwing a taper tantrum. Um, and it feels like it's heading in the same direction this year.
I
And
yeah,
I
I
think,
don't. Well, I don't
yeah,
know.
go.
I so that's so I honestly, I really, you know, in hindsight, yeah, markets at new highs. A couple months ago, I didn't think there was a chance. I thought we would see a rally off the lows. There was, we talked about the fat pitch once around the April lows. Conditions were kind of aligned, but I did not think we would get back to the prior highs, especially so quickly, because there is one. When you look at the type of sell-off that we had into early April, and you look at past rebounds back to new highs, quick rebounds to new high, one defining feature of those rallies has been Fed support. So you mentioned 2018, late 2018, that sell-off was really driven by, like you said, the Fed wanting to normalize rates. Powell was pretty hawkish. We pivoted and rallied back to the highs off of a change in the Fed's tune. There wasn't a rate cut, but all of a sudden Powell shifted from hawk to dove, and rate cuts were down the road. Uh, 2020, you had the massive, stimulus reaction, both from the government or from fiscal and from the Fed, from monetary as well. This time, you've not had that monetary catalyst. You've not had that dovish pivot by the Fed. There's been speculation that the Fed could cut rates, but guess what? After that payrolls number last week, market implied odds last time I looked were back down to 2 quarter point cuts this year. So you have
How many cuts?
two
Two,
right
right?
now. Markets are pricing 2 quarter point
Two
cuts
for
this year.
December.
Yeah,
Yeah.
and heading into that number last week, the market had slowly gone back to three. So there was finally some growing optimism that maybe the Fed would cut more than what they're projecting. But again, like this rally off the lows has not featured that Federal Reserve catalyst that you've seen on prior rebounds where we've had a sharp decline followed by a sharp rally back to new highs. That Fed catalyst that is just isn't there unless the market thinks Trump's going to force one to be there down the road.
Yeah, you talk about those rate cuts. It was funny. We just had a July. We're going to have a July meeting on the 30th, and we had a jobs number last Thursday, right before the long holiday weekend. Another strong jobs report, right? And rates went up on that, and the probability of that July cut, which I thought was, I couldn't believe the market was actually thinking there's any chance of a rate cut for the July meeting. It was above 20% probability according to the Fed swaps, and after that jobs report, it pretty much went to zero. So it just with what happened yesterday, I don't know if you saw, but take a look. I'm sure you did, but take a look at this chart of copper
Yep.
on the reaction to Trump's 50% tariff on copper. This is not just a regular spike. Copper was trading at 500. It spikes to 580, above 580, and it's now trading at 555. So a 10% move. It was more than a 10% move in a matter of minutes, but right now it's up a little bit over 10%. Um, Commodities are continuing to rally. If it's not, if it's not oil, it's something else. It's metals have been strong all year. So there's this lag to what we're going to see in the CPI. I think the market just hasn't seen it yet. I think the market, part of why it has rallied to all time highs, is looking at the inflation data and being like, well, the narrative on tariffs is wrong. It's not creating inflation. Um, but maybe they just haven't seen it yet because there's a lag effect.
Yeah, I mean, I think
And
yeah. So I got a lot of thoughts on this one, Eric. One, yeah. Okay, let's talk about the lag effect really quick of tariffs. I mean, with everything that's been announced so far, I saw an estimate yesterday that the blended average tariff rate could go to 20% now. So it's just below 16. It could go to 20% now. All right. So it's already the highest since 1936. So it looks set to go higher. Okay. So we've seen that show up in some of these. We talked about the prices paid component of these manufacturing surveys. Those are spiking higher. The last one was out last week. It's still hovering near the highest level since mid 2022. And mid 2022, year over year CPI was at 9%. All right. So we've seen it showing up in some of the early indicators of inflation. We haven't seen it show up in inflation yet. I think maybe one of the reasons for that is because companies seeing the tariffs are just they're eating them right now. If you come out and you try to raise prices, you risk backlash from the president directly. We've seen that with several corporations. I think there's also so much uncertainty over whether or not the tariffs will really go into effect. Companies don't want to risk jacking up prices now and alienating their customers, risk turning away demand if their competitors might not do the same. And so they're waiting to see where the dust settles out at. But I think going. So let's go back to copper for a minute. I think copper is the latest signal that you do have inflation coming down the road. One thing
Yeah.
I'll note really quick is that there was
Plus, a lot
very
of the companies, plus a lot of the companies have been eating the cost, but they're not going to hold that. They're not going to be able to for too long.
yeah, right. So yeah, I think eventually you're going to see that come through. But then the one that's going to fly under the radar, the one you just had the chart up for, is with copper. There's so many important things around that breakout in copper. So yeah, copper was trading just below $5 a pound. That was the prior all-time record high. So the move yesterday puts copper at a fresh record high. Uh, will there actually be the 50% tariff? So here we go again. This was talked about. This was mentioned. I don't think this is actually in place. I think this was threatened. So we'll see if 50% tariff copper actually happens or not, or if there's some sort of loophole that companies can operate under just to make sure prices don't get out of control. Because copper impacts so many different areas of the economy. And copper is very much called an upstream material, upstream cost. That's one that usually gets passed on when prices are rising. So that is why if copper has one of the highest correlations of any asset to long-term inflation break-evens. So copper has a extremely, extremely high, if not the highest, correlation to 10-year inflation break-even. So what that means is, copper is again another leading indicator on inflation. So you look at copper is just the latest evidence, in my opinion, this breakout that if it holds, that we're going to see inflation inflecting higher in the second half of the year. Because look, why are you going to put a tariff on copper? I mean, I was reading a note this morning. I mean, the analyst notes the U.S. they do not have enough mining, smelting, refining capacity to be self-sufficient, and so there's not one universal copper price either. So there's the price. What you're showing, that's the price of copper in the
Hmm.
U.S. The price of
Yeah,
copper
the
in the
London
U.S.
price was actually dropping on the news, right?
Yeah,
Yeah, and
right.
that is a fascinating thing.
Yeah. So we'll see what happens again because we don't have the means really to be self sufficient in copper. So it's not like you're going to force some domestic build out of copper mining and refining capacity. It's not going to happen. So again, this is where we'll see. It's been the tariff is threatened. Will he actually follow through with it, or will it be something much less than what the headline suggested yesterday? But right now, prices are holding up. They're holding above a pretty key level.
Yeah, and it's interesting. The what I'm seeing is, I think it's pretty obvious, but I think it's a big point where the reactions to these headlines is becoming smaller and smaller. At first, you had like 200-point S&P swings. That was a given earlier in the year. Then 100, then 50. Now it's like you had tons of headlines yesterday. 10-point swing max on per headline. So I think the market is looking past it, but the robots and the algos are not, and it's creating an interesting trading situation on an intraday level. Volatility stays low. It was interesting yesterday. The VIX was down all day, which look, I mean, the VIX has lost some of its predictive quality because now we have zero DTE. People can measure volatility with more precision on a shorter term basis. VIX is measuring things out 20 days, maybe a better tool for gauging macro risk. But yesterday was interesting because the VIX was just going straight down all day and the market couldn't rally. On top of that, you have the Nasdaq outperforming the market and the S&P couldn't rally. On top of that, you had the Russell 2000 up almost 1%, while the S&P was struggling all day. You had Tesla come back, so a lot of weird factors out there, and the market couldn't rally yesterday. And you look up at the board today, market is up. So I don't know whether yesterday was just kind of a recalibration. I'm seeing a lot of rotation and recalibration under the index, and maybe that's part of it. Um, Usually, when you see that, it could be bad for the market, or it could be a market that is consolidating. I'm not sure which one it is. I'm leaning bullish on it up until the end of the quarter. But what do you make of all this? Have you noticed the rotation in the market over the last
Yeah,
week and a half?
yeah. So honestly, I don't know if it was Monday or one day last week. There was one particular day where it felt like, and you might have some insights into this, but it felt like a momentum factor unwind. It felt like a reversal where the things that had been doing really well on momentum off the April lows got crushed, and things that had been lagging did really well. So yeah, I mean, there's definitely I agree. If just under the hood or anecdotally, I've noticed some of that rotation as well. Is the rotation bullish? I don't know. I mean, if it's rotation, if it's small caps like you mentioned, if you're seeing breadth broaden out, I think it's positive from that standpoint. But there's been a lot of rebalancing flows at quarter ends, and so who knows what to make of that in terms of being bullish or bearish. I mean, look, I think speaking to the complacency, you talked about low VIX levels. That's we're back to the low end of the range, going back to last summer. It looks like look, we're in the second week of July. It's going to be quiet period, probably low volumes. Historically, July is one of the strongest months for seasonality. I think July is the best performing month when you're in the post-election year. If I saw one of those stats the other day, so you're in that time frame to see that kind of low vol trading environment. Maybe things could get. Maybe that's why we're not seeing as much of a reaction to the headlines. But if we just want to talk about the market for a minute and the setup, I mean, I think it's really interesting some of the conditions that are coming into play now. If you look at the S&P 500, if you look at the RSI, it's the most, or last week it was the most overbought since, guess when, last July. So we had the late July peak in the market, and we had the sell off into the first week of August over the whole yen carry unwind fiasco. So I think it's interesting to see the RSI hitting a similar level as to back then. I think one key feature that's kept this rally going is skepticism. I think you've mentioned on these videos that the market's climbing a wall of worry. I think that wall of worry kept investor sentiment from getting too bullish for quite some time. I was pretty amazed to see the S&P when it was approaching new highs that sentiment wasn't really all that bullish, showing too much greed, but that's completely flipped here in the last week. CNN's Fear and Greed Index, that's an extreme greed territory. You saw a huge jump in the AAII bulls. Bulls jumped like 10% last week. They now outnumber bears. Another number we don't talk about a lot, the NAAIM, it's a National Association of Investment Managers. I like looking at that exposure index because look, you can do these AI surveys and you can tell me how you feel, but to show me how you're voting with your own money. And that's what this exposure index monitors. And that exposure index for active investment managers now stands at 99.3. That is the highest. That's higher than when we were at the February peak in the market. That's the highest level since, probably about July of last year. So there you go. We're hitting levels on some of these indicators that marked the top in the market in July of last year before it saw a sell off. So I think it's you gotta look at what's happening under the hood of these things, and I think it suggests some caution here.
Yeah, you mentioned the momentum breaking down a little bit. I How do you define momentum? If you define momentum by what went up over the last 12 months, which I think is in general how people and how I mean, there's various ways to do it, but in general, I think it's a trailing 12 month. If you look at the trailing 12 months on what stocks have gone up, number one stock I think is Palantir, right? And that one has been the top momentum stock, but you have stocks like AT&T in there now. Like 6 months ago, on January 1st, all you had in the momentum factor was tech stock, high growth tech, large cap. That predominantly dominated the momentum factor. Now it's a real mixed bag. I'm actually not getting any clues from following momentum because it's such a mixed bag. You have a lot of high dividend stocks with high momentum. You and I last time on the podcast we were looking at a lot of names in energy and other sectors that people that may be outside of people's radars that have great momentum, right? And so I don't know what to make of the momentum factor. I think the momentum factor has become a little bit. Um, it's almost like unfollowable. Like it's not giving a clue because there's no definitive leadership.
You're
Do you
not
know
you're
what I
not
mean?
seeing that common theme for
Yes.
for
Yeah.
industry. Yeah.
Yeah. But I think I think that at some point the real momentum stocks will come out, and I mean, take a look at this. I just want to share this headline with you. And you and I spoke about the next phase of the AI trade the last time around when we were on together. And here we go. Soundhound maybe had a little bit of a breaking out party yesterday, but a lot of these new names, Soundhound, Big Bear AI, Surge. I don't know what Big Bear AI is, but I do know what Soundhound is, and I'm positioned in that recently actually as agentic AI names rally. Take a look at this chart here. You had um, you had a typical look at this coiling of all these moving averages right around the $10 mark. And then it just broke out, and now everybody's talking about agentic AI and the next phase of AI. You and I were talking about that a couple of weeks ago. Like, this is something to look for. What do you think about this space here? Is it hype, or are we entering the next phase of the AI trade?
I mean, I think the AI trade has always been present. I don't think it's really going away since this this bull market began in late 2022. I think it's just it's rotated to different groups. Whether it's some of the NVIDIA has been a big AI enabler. Corollary to them with Taiwan Semiconductor. You had SMCI rallying back, in I think it was early 2024. So it's just there's the AI theme's always been there. It's been a rotation amongst companies that maybe are the pick and shovel plays versus the companies that can build AI apps and tools. And I think this is, yeah, I mean, it looks like a pretty decent breakout from, I don't know if I want to call it a bottoming base. I mean, that was a pretty sharp peak to trough decline on that pullback, but at the same time, it made a higher high and a higher low relative to what you saw in 2024. So in that regard, just tells you it was a pullback in what is otherwise an uptrend. For me, I still, I like to play it a little bit safer. I still like the companies that have a little bit more of a earnings and revenue tailwind that are already
Oh yeah, you
profitable.
can't you can't put you can't put your whole portfolio into Soundhound. You
No,
can't do that.
that's not what I'm
No,
suggesting either.
no, no,
But
no,
I,
no. You can't.
yeah, yeah,
But you
no,
can't
I
put
think,
your whole portfolio into Bitcoin either, right? Or
yeah.
Ethereum.
No, last time I was on here, when I mentioned, as Train Technologies as a pick and shovel play, and they're, in my opinion, I think they're still setting up. That's a HVAC company, so heating and cooling systems. That they're the revenue generator there is their exposure to data centers. Data centers
What's the
have
ticker there?
cooling needs. TT.
Yeah, just TT.
Yep, just TT. So they've broken out to new highs recently, and they've just been grinding sideways for the past, I don't know, month or so. So I think there's maybe an opportunity to buy a breakout out of that consolidation if we start to see it. Yeah, there you go.
Yep. Yeah.
So
Right
that
on.
so
So what you like this? You like the dip into that 50-day moving, right?
yeah,
You
and
want to
that's what's
buy
the
that.
purple? Is that the 50 day or is that the like a 2021 day? That's the 50 day.
The purple,
Yeah,
the magenta, the pink, whatever it
yeah.
is, that's the 50-day,
Okay.
right? That's the
Yeah,
50-day. Yeah, it's been kind of in a holding pattern up here at the highs,
yeah.
right?
Actually, yeah, and
Would
you
you
know
buy
what?
this 50-day moving?
I won't buy a test of the 50 day. I would look to buy that potentially on a move to new highs. So I'll get involved when it starts to show it wants to move higher instead of risking buying inside this consolidation area and it wants to keep consolidating. So I'll wait until we start to get above what is that about 440 or so and see if we can ride. So this would be more of a momentum breakout trade and see if we can ride that higher.
Yeah, I like that.
Let's
I'm
go.
looking
Actually,
at.
yeah.
Yeah,
No,
go
you go
ahead.
ahead.
Go ahead.
Okay. Well, I was going to say, let's one
I'll,
one area
I,
one area I've been looking at that has completely fallen off the radar. That it come every now and then it grabs the headlines and everybody will be fixated on it and then it just disappears. And that is with Chinese stocks. I don't know if you've been following any Chinese stocks at all, but FXI is the big
First thing I do is I always go to ASHR
okay.
ETF, right? Yeah, little breakout here in
Yeah.
China
So
stocks.
yeah, watch. Again, the big risk with China stocks is I remember back during the first Trump administration, one of the tools of leverage was the threat over delisting China-based names. So be careful with what you're trading there. Like you mentioned with Soundhound, you don't want to put all your eggs in one basket. So if you do look to put on a trade here, just know that risk is there. I haven't heard about it in a long, long time, but I do remember that was used in the past as a point of leverage. But I like some of these Chinese-based fintech slash brokerage names. So FUTU is one, and TIGR is another. TU,
FUTU.
yeah,
That's a funny.
yeah,
That's a funny ticker,
yeah.
right?
Punch in FU, Eric. Come on.
FUTU is the ticker.
Yeah,
Yeah, the chart looks good.
yeah. So there,
The
that's
chart is
one.
giving a big FU to bears here.
Yeah, and
The
I think
chart
if you
is
were to
FU
take
to
that
bears.
back, there's yeah. So yeah, those are some names that I think are flying under the radar right now. FXI is the broader ETF to look at the whole Chinese space.
So what's your thesis on China? Technically, it all looks good, but
Yeah, more
the U.S. market
more.
technically looks good, right?
Yeah, I mean, well, U.S. is pretty extended off of that move from the April lows. Obviously, China's had a rally as well, but there's just been more. If I look again at FXI, it's more sideways, choppy consolidation type action since late May. And with all the headlines around tariffs and trade wars, like there's a lot of I have to imagine there's a lot of skepticism around those names, which I like as a tailwind as well.
So is this a play of a global kind of recovery, and maybe China needs to catch up a little bit,
I mean,
or is
yeah, maybe there's constant headlines around the state of China's economy and speculation around some massive wave of stimulus that they're going to unleash. Look, I don't know what the catalyst is going to be. All I know is that when you look at the chart, I mean, it's showing that type of bullish consolidation action and an uptrend. And if we start to move out of that, the headlines will make up themselves. I don't know what the headlines want to be. The head,
That's
like
actually
I don't know. I don't know what the narrative's going to be.
people make up themselves. That
Yeah,
is so
I don't
true.
know what the narrative's going to be, but the price action will determine the narrative. We'll figure out what the narrative is. But I trade the
Yeah,
price
we'll fit in the narrative once it matches price.
exactly.
Yeah, that's how it works in the market. People figure out what the narrative is after the move. But yeah, the one thing about China stocks I've noticed, they're not always like correlated with like the U.S. market. Like sometimes they'll right. It's weird. They don't typically, and even like during Asia, this year has been all year long. It's calmed down recently, but from like I would say February till just a few weeks ago, trading at night, the Asian trade, as soon as Asia opens up, gold would start to move. US all these macro futures were really moving at night. And so you're kind of forced to watch China a little bit during those hours in Japan. And it's weird. It's like you'll get a few ticks of correlation and then it just disappears and everything starts doing its own thing again. So I don't know. It's definitely uncorrelated. So there's that benefit for sure.
Yeah, yeah. I mean, look, when these things move, they move. I mean, I'm looking at again at FXI, and in late 2024, I mean, it went from 28 to 38 in less than a month, in a couple weeks. So China was all the rage then all of a sudden, and then the trade just died and it all went away. No one cared. So kind of looking for maybe something similar this time around. If we see a breakout out of this recent consolidation, you know, get all the hype going again. See if you can get a quick move out of this. Definitely not a long term play that I'm advocating, but more of a short term speculative trade.
Yeah. So any thoughts about? Are there any other areas that you're looking at? I like these stock picks you're giving. They're
Yeah, I actually
very
moved away from
interesting. I like
moved
that
away from.
they're under the radar. That's the best thing I like.
Well, I want to take I want to take a contrarian view on Bitcoin right here because
Oh no, we're gonna
yes,
be at odds, my man. We're at odds on
yeah,
that.
all right, let's duke it out. Look, like if I go on Twitter or X or whatever the hell it is, all I see is bullish breakout setups on Bitcoin. Like everyone's talking about Bitcoin's, call it a bull flag, whatever it is, and there's a saying, when it's obvious, it's obviously wrong. Like everyone is talking about this. Like I have not seen anyone not talking about this. But here's my contrarian take on Bitcoin. I think
Okay.
Bitcoin is an excellent indicator for the stock market. We wrote about this in Larry's e-letter within the last week or so, and it's that look, Bitcoin peaked out about a month before the S&P peaked in February. Bitcoin peaked in January, S&P peaked in February. Bitcoin did not fall to a new low in early April. While the S&P was taking out the March low during April, Bitcoin held up. Bitcoin tipped the reversal in the S&P. All right. Bitcoin went to is a marginal new high, but Bitcoin went to a new high in late May ahead of the S&P's move to a new high. So again, there's your third instance this year of Bitcoin leading the S&P. Bitcoin has not confirmed the most recent highs. Bitcoin topped out in May. Bitcoin has not made a fresh high. It's made actually over the last month or so, it's made a series of lower highs. Everyone's looking at that saying, "Oh, we're in a bullish, consolidation." But I look at it as, is this an instance where Bitcoin's warning on the market? It's led all year long. It's not making new highs as the S&P and the Nasdaq is recently making new highs. Is that something of concern? At least definitely something, in my opinion, that you should note.
So if Bitcoin breaks above its previous May high, does that negate what you're thinking?
If it breaks out, that negates what
Does
I'm
that then
thinking.
confirm that the new up move, or how do you look at that?
If it does break out, it would confirm the new highs in the S&P. But my point is that it's been leading these trends in the market. as opposed to you don't wait for Bitcoin to confirm. Bitcoin's been tipping what's going to happen weeks to a month in advance.
Okay.
Or yeah, so that, I mean, just something to note. Like I said, my feed on Bitcoin is so bullish right now. I mean, it's just everyone's waiting for this breakout, and so I don't know. It just makes me a little worried when everyone's positioning and geared up for the
Maybe
same
it's like
trade.
4D. Maybe it's like 4D chess where they just do that in order to get you bearish, but it's actually bullish.
They want to get, yeah. I guess if you can get the one guy bearish on Bitcoin, then maybe that's a change from the past.
Yeah, I don't know. No, I mean, yeah, I don't know about that. That as a leading indicator, I think where obviously you could see that in the chart and stuff, but I think maybe it's look. There's definitely something there in terms of um, market happy, and people will are more willing to buy the perceived risk asset of Bitcoin, but um, I don't know. I
Yeah. If it look, I know when I'm wrong. If it breaks out, I'm wrong on that view. But
That's
Bitcoin,
only 2,000 points away.
I know it's not that far, but I mean, look, it was Bitcoin made a marginal new high back in late January. Like it made a marginal new high in May and has not gotten above it. So I'm just Bitcoin has led turning points in the S&P, and if it can't, yeah, it's close, but it's not there yet. I mean, it's been lagging this most recent up move in the S&P and the Nasdaq. So I think it's worth got to pay attention to that here.
Okay, all right. Yeah, I'll be on the other side of that trade. I just think I look at Bitcoin. Part of the way I look at Bitcoin is the way I look at gold, and I think it's a long-term macro play to the upside. And all these things, just what has been working in both of these has been buying 5% dips, 10% dips on a technical setup, and as a long only, like long only on gold, long only on Bitcoin. And what I mean by long only is you're only looking for one side of the trade. Like I'm looking to buy. I'm not, I'm ignoring any technical indicators that are pointing south for because I know it'll probably be short term. All I'm looking for is to execute on long signals for Bitcoin and for gold. Gold right now doesn't look good technically. And I think Larry picked up on that very well the other day. But I wouldn't short it. Right? I know he'd kill me for that because he's like, "Well, you're a trader. Why wouldn't you short it?" Because I think it's a higher probability to look for the long play in these things rather than look for the short play. But that's just me. Um, so as we head into the trading day, let's. What do you think the straddle at the money is on the SPX right now?
I mean, look, this week's really light on data. You've got the tariff headlines coming out, so maybe that offsets a low straddle a little bit, but I'm going to say it's around, I don't know, I'll say 28 points because it was pretty low yesterday.
You're over. You are
Over.
over. It is. Yeah. It is 23.
Wow.
That's right.
Not,
Wow was the
nothing,
correct.
nothing,
Wow was the
nothing
correct
there.
answer.
50% tariffs on copper and the straddles at 23.
Yep. So wow is definitely the correct answer, and it's a 23-point straddle. So the market is clearly not completely disregarding this stuff. Any tariff news, the market just
It's
it's
July and the market's on vacation.
yeah, okay.
That's how it feels.
Maybe a little bit. No, maybe a little bit of that. Is July seasonally bullish? I think it is, right?
July is like one of the most bullish months of the year, looking back.
Right, right. And then at
You know,
the end of the month, it starts to get a little right, something like that.
yeah, yes.
When does it get seasonally bearish? Like end of July or?
I can't remember if it's very end of July or start of August, but yeah, then you hit that period of August and September, poor seasonality.
All right.
So right, well, that's how it played out last year. I mean, we had the late July. It was like July 24th or something like that. We had a late July peak last year that led into the, I think it was a more than 10% correction into early August. But well, similar conditions to back then. I think it's interesting to note, but we'll see what happens.
Yes, sir. Okay, well, it's 9:10. I'll let you wrap up with any closing thoughts that you want to share with us.
Yeah, I think the most interesting action to watch today is, in probably over the next week or so, is outside of the stock market. We didn't get to it, but watch 30-year yields. I think you guys have talked about that recently. Watch for a breakout and 30-year yields, and then I think maybe one of the most consequential breakouts for the second half of the year has been happening in copper. If that's tipping anything on the inflation picture for the second half, that is going to be a major, major catalyst for investors to contend with. So watch near term if copper is going to hold those gains.
All right. Yeah, next week we're going to have an inflation report. And I'm of the mind that we've seen the last soft inflation print in quite a while. So maybe next week that starts to reflect what's happening. So we shall see. Thank you very much. Have a great day. Always a pleasure talking to you. And we'll see everyone again tomorrow morning.
Sounds great. Thanks, Eric. See you, everyone.